All right, all right, all right. Today was a nice kind of day that I like, a Monday, June 10th. Welcome to my daily review. And today was a textbook perfect day from my perspective. Why? Well, the Nasdaq went up 59 points or 0.35%, closed at 17,192. And you can see if I get the track price on here that it is 1.1% above its 10, 2.3% above its 21, and 5.2% above this red uptrending 50 simple moving average. Now, I like today because it opened lower. You know how much I don't hate, I despise, I discourage any activity on a gap, Monday morning gap higher, but the Monday morning gap lower, I like. And especially, we're what, 25 minutes in, and made this bottom here, 17,057. Then some buyers started coming in, very nice, and our stock started improving. And we saw NVIDIA down at the open, and a lot of stocks, Novo Nordisk, and then they just started powering higher. So looks very good from my perspective. For a Monday, this is good. I know a lot of people are cautious because Jerome Powell speaks on Wednesday. We have the inflation data coming out, the CPI Wednesday and PPI Thursday. So people are really nervous, and you never know what Jerome Powell is going to say. But a good day today for the Nasdaq. I'm going to toggle over to the S&P 500, and you can see this cup with handle pattern just breaking out. This looks textbook, just beautiful formation here on the index. There you go. There's your shakeout to the 50, and boom, move higher. That looks fantastic, folks. It was up 13, we'll call it 14 points today, or 0.25% up to close at 5,361. S&P looks fantastic. Like I say, Powell's going to speak on Wednesday. They're not going to do anything. They're not going to move the rates or anything. But people get nervous. What's he going to say? The Wall Street thinks he's going to be late to cutting rates like he was late to raising rates. So that is a concern. These guys are a little slow on the punch. And they certainly were with their transitory stance before they started raising rates, the end of 21, end of 22. But they haven't done anything in a year. They're not going to do anything on Wednesday. They're just going to talk a little bit. And so the market will wiggle and wobble, and you just got to deal with it. I'm not going to change any positions unless, stuff crashes below the 50, but you got to give your stock room to move on, Wednesday when after the decision, and even Thursday, there'll probably still be some movement. Usually the first move is the wrong move. If it goes up after he speaks, then it will go down the next day. And if it goes down after he speaks, it goes up the next day. Anyway, enough of that nonsense. Apple, typical Apple, it runs up from 164 to 190. What did it get to? 198 this morning, 197.30. Yeah, well, and then, sells off on the news. This is classic Apple. Buy the rumor, then sell the news. It doesn't matter what they said. They could have come up with, the best invention since sliced bread, and it wouldn't have mattered. They're going to sell this thing and just pull back to its 10 EMA. Nothing wrong there. Probably an opportunity to buy. Buyers will come in here in the next couple of days. But I know I'm not interested in buying Apple here. It's just not my cup of tea. But I do like the base on base pattern, and it is setting up near a buy point. I haven't put it on my ready list. I don't believe it might have been on there last week, but it's just not a stock that it's not my style really. Apple, but obviously a great company, made people fabulous amounts of money for many, many, many years, including some special people in my life. But anyway, that's Apple. Meta's one that I was going to put on, but I just kind of limited the ready list this week. I don't think I put it on. No, I didn't. But I do like it. I like it right there at 500. Above 500, I like it. Below 500, I do not like it. But if it pulled back to that 582.50, that would be fantastic. You can see it's just setting up in a base, or I mean, anybody can see that. I'm not really too concerned about that big sell-off there on the earnings. It's just, knee-jerk reaction, and now it forms a base. You can see it's been 9 weeks, but the earnings line is heading due north, and they're probably going to continue to deliver strong earnings the rest of this year and into next year, as long as, the economy stays, fairly strong, which it has been. All right, and then we have to get to NVIDIA, the 10-for-1 stock split. Over the weekend, I saw my account, and it went from, it was 10 times the shares. It adjusted for the shares, but it didn't adjust for the stock price. So it was like 1,208 times the 10 times, right? I'm going like, wow, I had a pretty good weekend. But it recalculated this morning, unfortunately. And but you have 10 times as many shares at 10 times less the price, whatever. Now it's the chart is adjusted. You can see 97.40 was the breakout. You ran up to 125.59. Now it's pulled back the last couple of sessions, allowing the moving averages to catch up. It's doing nothing wrong. I was actually a little surprised this was up today. 307 million shares traded. This is going to be highly liquid now because 10-for-1 stock split. I don't know if Market Surge has the new data in there. I don't think they do. But anyway, it's got a lot of shares. And anyway, NVIDIA, as long as it goes sideways around that 120 area, that's fantastic, allowing the moving averages to catch up. I did notice that there were quite a few semiconductor names that were trading at, all-time highs. Applied Material one breaking out of a base here after pulling back. So it broke out of the base, pulled back to the 50, and now just charging higher to new highs. That looks fantastic. KLAC, KLA 10 core, used to be KLA 10 core. This is broke out of a base, pulled back to the 21, found support. We're seeing a lot of this. This is what happens in markets, bull markets or markets in uptrends. They'll find support at moving averages. It's probably, machine trading, like companies, they want to buy this stock at moving averages and they just program it. So TSM, Taiwan Semi, another one making an all-time high. And the semiconductors are super strong. Another one that I have on here that is going to report earnings this week got upgraded today. I don't know why, analysts have to upgrade the stock. Just wait till the earnings on the 12th, which is Wednesday, and see what they have to say. And if it's good, you can upgrade them then. If it's bad, then you can downgrade them. But this nonsense of trying to manipulate the stock a couple days before earnings, just listen to what management has to say. And if I go to the weekly chart here on Broadcom, you can see you can see a big base moving higher, now a consolidation period. Earnings line that's heading north. It doesn't look like it, but it's heading north. If you look at the earnings down here, 6%, 6% is not a lot. So now this earnings are expected, 18% lower. I kind of doubt that with AI and everything. So we'll just have to wait to hear what they have to say on Wednesday. Anyway, that's enough for the semiconductor names. Now, some of the beaten down stocks got some love today in the semiconductor auxiliary plays, like the data center plays, which is super micro. This one's just forming a base, and you can see the moving averages, short-term moving averages trading lower. But to me, this is just kind of forming a base here. It looks fine. Dell, another one, got sold off to its 50, probably form a base as well. VRT, Vertiv traded below the 50. Now today tried to rally back through it. We'll see if it gets rejected tomorrow. It's right there, just a tick below the 50. We'll see what happens with Vertiv. CEG, Constellation, sold off below the 50. I cut it from our leading stock list, even though I still like it. It was up 8% today. So we'll see what happens with this stock. So it broke out of a base, ran up to 236, pulled back, closed below its 50. But this is the first trip to the 50 since that breakout. So we'll see if this one can power higher. VST is another utility energy play with a nuclear power component. And this one, hasn't had a base in a long time, but pulled back near its 50. A nice move today of 3.7%. And let me see. Oh, HPE, they reported last week, right? And nice report, nice power earnings gap there. 11% move with volume and just trading higher. And another one that I like, not really in the power, but this is CAMT, scientific measurement stock. You can see it broke out, pulled back to its 21 and found support, now made a new high today. So another stock that I like doing well, the crypto stocks. I have this one on our ready list. I like these three that I'm going to show. Coin just pulled back to its 10 and found support today. You can see this setting up in a base here. So I believe eventually it'll take out that old high, but you got to give it some time. MSTR, this is one that I contemplated on putting on our ready list. I didn't do it because I want to keep the list limited this week with all the noise from the Fed and the inflation data, but I might add them later on. This one just being supported by its moving averages, MicroStrategy, MSTR, and then Hood broke out last week, and now you gotta give it some room here. It was up another 5.5% today, but I want to see these moving averages catch up, and it'll probably trade with these moving averages after the breakout from 2055. So Robinhood looks good. I believe I took that one off the list. Yeah, it's too extended here. Let's get a load here. 7.8% above its 10. So yeah, that's it needs to allow those moving averages to catch up. Anyway, early in the morning, you could see the retail stocks and the semiconductors are going to get some love today. And I was just watching CROX this morning. Now it formed a base and it broke out, and it broke out from what the 146 level to a 158. Now all it did was pull back to its 21, which coincides with this old buy point. So I put this on the ready list because it's not in a bear market. If it did this, return to its pivot area, I would be more skeptical. But an uptrending market, a strong market, is pretty common for stocks to break out and then return to the pivot point. The second mouse gets the cheese, right? The breakout, and then you think you're going to have a big run here, and then you get the old rug pull, and it pulls back, and you sell it, and then it blasts 5% higher today. So anyway, CROX just looks fantastic to me, I think. Here you can see the first tick was lower, and then it just started getting buyers, and it saw buying coming in all day long. CROX is very strong stock today. Anyway, yeah, it's very common. I would say at least half stocks in the when they break out, they return to their pivot point, which just happened to coincide with the 21. So CROX looks good. Abercrombie and Fitch, I have a lot of people give me a hard time on this one. They say it's phony numbers and they don't like it and blah blah blah. I have no skin in the game, but I've just got to say it had this big run. It had consolidation, and then it broke out again, and earnings are accelerating. Sales growth, I don't know, it's doing $1 billion, more than $1 billion a quarter with a 9 billion market cap. So it's, it's 2 times sales. It's not expensive. But I don't argue with the market. I don't argue with people. I don't argue with the stock. It wants to go higher, it's going to go higher. And it doesn't matter what I have to say or anybody else. Abercrombie and Fitch looks fantastic here. You can see the earnings line heading due north. You can see the consolidation here, the cup pattern, the big move, now consolidation here, and now it wants to move higher. So you can't argue with success. So it looks good to me. Skechers is another one in the shoe group. This one again, the breakout, the pullback, and then now it's just riding its moving averages to higher prices. Skechers looks fantastic. So does On Holdings, which is I got to go to the weekly on this one because the IPO, the IPO'd and right before the bear market, and they got sold off. But now I think investors are starting to like this stock, and it's moving, it's in its advanced phase, institutional advanced phase. So no telling how high it could go. That one looks good as well. And then BJ Wholesale, yeah, broke out of a base, just moving higher. Every time it pulls back to the 10. That's a Kelly Slater stock now. Just trading higher with its moving averages. Looks fantastic. Anyway, retail was strong today. I got to get to the software names. GoDaddy. This is going into the S&P 500, and it was rewarded with a 2% move. It's just been a monster stock, though. I mean, this is broke out way back here and has not formed a base. It just keeps riding its moving averages. That's November when the rally started after the 3 waves down, and this one's just riding its moving averages like it's a Kelly Slater stock as well. CrowdStrike going into the S&P as well. This is classic textbook, cup with handle, vicious shakeout below the 50, and it's the shakeout before the breakout. Now you see the RS line, jamming through its moving averages, pointing due north. It sold off a little bit into the close today, huh? Yeah, but the 7% move. Let's take a look at the 5-minute, because I saw it higher. Yeah, it really ramped higher. That's I don't know if that's short covering or just institutions coming in as it enters the S&P June 24th. GoDaddy and yeah, a little selling at the end here. GoDaddy and CrowdStrike. And the stock that did not get into the S&P, and the shareholders here at Palantir thinks it should be in, and maybe it should. I don't know. I don't make those decisions, and neither do the people at Palantir. But they had a little bit of a tantrum here at the open. They sold it off, and then some buyers came in. Cooler heads prevailed, and Palantir was just flat on the session. Okay, some other software names that I like. Software's been getting killed. There's a paradigm shift with the artificial intelligence, and if you don't have that component, and software is going to be, a challenge. So you got to really be careful in this software space. Elastic sold off prior to earnings and looks really strong since the earnings. I like, this, 108.72 is an area of interest. 111.65. Elastic looks good. I like AppLovin too. A lot of people, give me a hard time. It's not doing anything. Well, it's just forming a shelf pattern here. It has a 4 weeks tight right in here, 4 weeks tight area after, 4 weeks following its earnings report. You can see the earnings line heading due north, but it just pulled back to moving average. These things aren't going to go up every day. This thing's had a heck of a run. And now it's just, like I said, forming a little shelf pattern after that nice move following earnings. It was one of our earnings, power earnings gap, up 14% on May 9th. So yeah, it's been over a month, and just give it some more time. Spotify, another one that I like. Again, people give me a hard time, and people are emotional about stocks. I don't really care. I mean, this is just consolidating in a base, looking at it technically, doing nothing wrong, pull back to its 21, made a big move last week. I think they said they were going to raise prices, sold off 3 days in a row, back to the 21. It's just still consolidating in a base. I do have this one on the ready list. I like it. You can see the consolidation pattern. Maybe it needs a couple more weeks, but the earnings line's heading due north, and nothing wrong with Spotify. It probably needs more time. All right, that's it for the software names. I got to go to the hardware stocks. I love these things. I'm just kidding. I'm not emotional about stock, but I just do have to acknowledge these are very strong stocks. The group is one of the stronger stocks, industry groups. And there's 4 stocks that I really like in this group. Micron is one, and it's starting to push away from its base. You can see the cup with handle pattern, nice shake out to the 50. That's textbook stuff. There is it traded down to 121 on May 31, and then has been powering higher ever since. So hopefully what I want to see is this thing just find support at the 10 or the 21 as it rides higher. Same with Western Digital, WDC, cup with handle, not quite the shakeout Micron had, but still minding its moving averages. And I still think this is actionable, but it's starting to push away from its base, much like Micron. Another one is a Charlie Giancarlo's company, Pure Storage. This one had a little wiggle and a wobble around the earnings report. It just pulled back to the 21 though, and it's been up, 5 days in a row. That looks good as well. And the last one is NTAP. NetApp, they had a strong earnings report, and they made another new high today. That one looks like it wants to get on the Pacific Ocean and hang 10 on the waves there, and like Kelly Slater, just ride the wave higher. That's what it looks like to me. Anyway, the computer data storage group, very strong, and a couple of them are still actionable. All right, I got to get to the drugs. HIMS, a lot of people are really hot on HIMS. I'm okay with it. I mean, it's got strong sales growth. It does have some earnings. I didn't pick this as one of my 10 backers. Let me say, what about HIMS? Well, maybe, I don't know. It could be. It's got strong sales, expected growth. It's got strong expected earnings growth. Doesn't quite have the cash flow or return on equity yet, but definitely one to watch. as you can see, it broke out of a base here. Typically, when these ones go straight from the bottom, 11, it was $11 there on May 3rd, and then ripped up to $20, was it? $20.11. Normally those take some time, but this thing didn't even come back to its 10, now ripping higher. Today it made 22.10, so that's definitely one to watch. That thing is showing a lot of strength. Eli Lilly had their Alzheimer's drug, the FDA is looking at it, improve it. They're just going to have some kind of label or some type of, normally they'll just say, there'll be some just qualifications on it, that's all. So, but approval, definitely looking like, the first $1 trillion drug stock for sure. 822 billion market cap. Not a real stretch to see this going higher with a couple more blowout earnings reports. You can see the cash flow and return on equity on this one, and 1.2 up down volume. More buyers and sellers here. And once again, it just broke out. Now, you can't chase it here. It's extended, but probably going to trade higher with its moving averages. Novo Nordisk has been up 8 days in a row. It's been trading, like opening lower than trading higher. And you can see the volume coming in, and textbook, classic cup with handle pattern, just a 2 or 3 days shakeout, and now moving higher. This has a lot of shares, so it's not going to, rip higher, but it's going to push away and show strength. And obviously there's a lot of buyers in this name, but you can see how many shares are in the float there. Just is a great company, great balance sheet, 1.5 up down volume. So yeah, way more buyers and sellers. NVO looks fantastic. New high today, up 8 days in a row, and it's getting extended. I don't think you can buy it anymore. I believe I took it off our ready list. Yeah, because it's it made its move for, it'll probably go higher, but I don't want to chase it up here. How about that? All right, a couple of solar names I'm gonna get to, just because I put this on my 10 bagger. Maybe how about a 2-bagger video? But anyway, this is a Next Tracker, and I like this fundamentals here. I also like the technical setup, the cup with handle pattern, little shakeout down to moving average, move 4.3%. Today it was named to go into the S&P Mid Cap 400 on June 24th. So we'll take a look at the weekly chart. You can see it just, IPO'd not too long ago. What were we going to say, last summer? February. Okay, February of 23. But you can see the earnings line heading due north. I like earnings. Call me a sucker, but I'm an earnings kind of guy. First Solar is another one in the group. I think, there's 2 stocks to own here. And if you want to own the solar energy, First Solar, which pulled back to its 10, and Next Tracker, because you got a bunch of stocks that are down here, like Enphase, trying to emerge from a stage 1 base. This is Run, same thing, trying to emerge from a stage 1 base. ARRY, these are not strong stocks, but they could be, so keep an open mind. But so far, it looks to me like Next Tracker and First Solar are the 2 to own. Anyway, thank you for watching. That's it for me today. There's a lot going on this week with the Fed and the CPI and the PPI, inflation data, blah, blah, blah. But anyway, in honor of the great Steve Jobs, I lied. I have one more thing. I want to talk about just some of there's a paradigm shift in dining, and it's really being reflected in stocks here. Bros is one that's, taking market share, and I have a funny story. I go to Whole Foods and get, I shop there, and there's a one lady there that gives me dog bones for my dog, Roscoe, and she's a very nice lady. And so I was going to buy her a gift card for like Starbucks, because Starbucks is right next to Whole Foods. So I asked them there, all the employees were working there. And I asked them, you guys go to Starbucks on your break, because I was going to buy her a Starbucks card. And they go, heck no, we go to Dutch Bros. I mean, it's like, wow, very loud and convincing, like, no, we don't like Starbucks. They're younger kids and they like Dutch Bros. They go to Dutch Bros. So I went over to Dutch Bros, got her a gift card, and, everybody in there is a young kid. It's packed. Yeah, I mean, Dutch Bros, it's breaking out of a stage 1 base, doing nothing wrong here. You could see the, this, first of all, they IPO'd right before the bear market. And now it's emerging from a stage one base, earnings line heading due north. They're, you know, breaking into the south and moving up the eastern seaboard. And I think this is more of a long-term story, but it's not only Dutch Bros. I mean, this is Sweet Greens, which I've nenever been to one, but they're only in 16 states, so plenty of room to grow. You can see the earnings numbers down here in the sales. Sweet Greens, another one that, you know, looks really strong. It broke out of this stage one base and has been moving higher, pulling back to moving averages. So that one looks great as well. CAVA pulled back a little bit last week. I'll go to the daily chart because you know, there was some insider selling, whatever. But yeah, so last week had kind of a rough week, but it didn't even pull back to the 21 today. It was up 4%. But I think there's a paradigm shift with dining in our country, and not saying that McDonald's and Starbucks won't do well, because I think they will. I just think there's room for these other companies to do well. Wingstop, every time I post Wingstop, people say it's overvalued, it's going to crash. Maybe so, but it just keeps going higher. So, you know, I trust the market, you know, more than I trust people. So anyway, it is overvalued. I mean, I shouldn't say that's not overvalued. It's valued for what people want to pay for it. But it does have, like, I don't know, 700 million in sales with a, you know, 11 billion market cap. So it's trading at, you know, more than 10 times sales. It's pretty pricey. So anyway, that's it for me. I do like the restaurant names. There's a lot of them, more than what I just showed. You know, to me, I think there's a real opportunity there. You have to pick the right ones. Maybe we don't know exactly which ones are going to be right ones, but those ones that I showed you are flashing. Shake Shack is one that's very popular. You can see this, you know, consolidation, the breakout here. Now it's pulled back. Wow, like 6 weeks in a row. How does that look on the daily? Ooh, underneath the 50. So yeah, like I say, there's going to be winners and losers. More will be revealed. You just gotta, you know, wait and see who delivers these strong earnings report quarter after quarter, and that will tell the story. Anyway, that's it for me at mcstockcharts.com. We never give up. Thank you for watching.